2021 has been an impressive year for the Indian primary markets, with highest ever fundraising in a calendar year, and the momentum could well continue in FY23. According to a note by Prime Database, 54 companies plan to raise a massive 1.4 trillion rupees in the upcoming fiscal year, including the much-awaited LIC IPO. These 54 companies already have market regulator Securities and Exchange Board of India's approval for raising the money. Another 43 companies, the note said, are looking to raise about 81,000 crore rupees, where SEBI approval is still awaited. The amount raised in FY22, according to Pranav Haldia, Managing Director, Prime Database Group, was over 3.5 times 31,268 crore rupees raised through 30 IPOs in 2020-21. The previous best year was financial year 2017-18, when 81,553 crore rupees was raised. According to Haldia, IPOs from new age loss-making tech startups, strong retail participation and listing gains were the other key highlights of 2021-22. But public equity fundraising dropped to 1.70 trillion rupees from 1.9 trillion rupees in the preceding year. The largest IPO in 2021-22, which was also the largest Indian IPO ever, was of 197 Communications for 18,300 crore rupees. Some of the other prominent ones included Zomato, Star Health, PB Fintech, Sona BLW, and FSN E-commerce, the parent company of Nykaa. And retail investors were a force to reckon with. The average number of applications from the retail category was 14.05 lakh, the Prime Database report said, in comparison to 12.73 lakh in 2020-21 and 6.88 lakh in 2019-20. The highest number of applications from retail in 2021-22 was for Glenmark Life Sciences, Devyani International, and Latent View. Going ahead, analysts expect the secondary market to remain choppy due to the geopolitical crisis between Russia and Ukraine. This, they feel, will have repercussions for the primary market activity as well. G. Chokalingam, founder and chief investment officer at Economics Research, for instance, expects the Sensex to remain in the range of 56,000 to 57,000 till a solution is found for the Ukraine-Russia war. Here's how he sees the primary and the secondary markets play out in the next fiscal.
It will be better than what we are seeing in the last quarter of FY22 for both primary market and secondary market, because as you know, unprecedented level of FI selling came. Still the market is down only 7% if you take Sensex, or if you take overall market cap, it is down just about 8%. So this is also unprecedented. Despite such a massive FI selling, the market has not crashed. But FY23 would be different. That's because 23 GDP growth of India, most institutions say it would be around 8%, which would be still one of the fastest growth rates across the world. And secondly, the massive structural change in terms of retail investors pouring in. Even last week, more than 5 lakh investors have come into the market. So there is no drop in the number of investors coming in. So they would give solid support to small cap, mid cap in FY23. And that is why both secondary market and primary market would be good in FY23, because most of the IPOs are largely from some small and mid-cap space. So that is where the focus of the new investors. So I remain quite optimistic. On the war front also, I believe it's getting exhausted for both Ukraine and Russia. Neither of them is gaining from this war, and more pain for Russia on economic front. So somewhere in 4 to 5 weeks, I see some compromise being found.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.